tax planning at BGW is really our bread and butter. Really we look at one of our core responsibilities is helping you manage your income tax liability and to never be surprised by what it looks like and to have some really concrete ideas about what you can do to control it. If you really think about it, income taxes are one of the bigger expenses that you're going to pay as a business owner, but you do have some ability to control. A lot of that depends on really the life cycle that you're in as a business. As a startup, you're really looking to not pay any taxes because you're looking to avoid paying cash out where you have opportunities to not pay cash out. As you start to get a little bit more mature in the business life cycle, then you're looking at more traditional strategies in terms of creating timing differences, figuring out how you can maybe take an ordinary rate and translate that into a capital gains rate, maximize the use of entities in terms of, does it make sense to have a C corporation somewhere, depending on the nature of the business. So within BGW, we're constantly looking at what are your particular facts and circumstances, and how can we do the best job that we can to help you, one, not pay taxes that you don't have to by either figuring out things that you should be deducting that you're not currently deducting, and also credits and deductions that you should qualify for that you're not currently taking. Those are layups. Number two is creating timing differences by trying to move taxes paid in one period into another period through legally aggressive mechanisms. Because if you really think about it, if I can have $1 pre-tax and I generate a 20% rate of return on that, that's just a simple math problem to see that dollar deferred is worth more to me than paying going ahead and paying the tax now if I can get away with it, if I can generate a return on that dollar. Now, if I'm just keeping it in my bank account, probably doesn't make too much of a difference. But if I can reinvest it in my business or reinvest it in something else and make money on it, I'm better off deferring, factoring in, any possible increases in tax rates in the future. The third is just figuring out a structure that really works in terms of, changing from one rate to another. So again, that's classic cases of trying to take an ordinary income tax bracket and figuring out how you can get capital gains treatment with the same, set of facts and circumstances, but just getting the organizational structure right. And then really lastly, the thing we're always looking at is how to transfer wealth to the next generation and minimize, the level of estate tax that has to be paid on an estate. So we're really taking from, cradle to grave, and then, from death and beyond, I guess. That's really morbid to think about. But minimizing, delaying, deferring that tax liability as much as we can over the span of your lifetime and your heir's lifetime. It's really how we view our role at BGW within tax planning. We're really proactive about it in the sense that we're constantly thinking about taxes 1 year, 2 year, 3 year, 5 years, 10 years in the future. When big events come up, our goal is to figure out how can we help you structure a transaction so as to avoid or mitigate taxes as much as possible. So again, taxes we really view as one of the few controllable expenses that you have, that if you just implement some simple strategies and do them over and over again, you can really control your liability.